Go for it, mate.
Morning.
Morning, mate. How you going?
Wow, what a big night overseas and start to the day today.
Yeah, certainly. A pretty big pullback. It's interesting. We've had a big announcement about Rio Tinto and Glencore sort of walking away from each other. Um, Rio's actually up in our market this morning, even though it was down around 5% in the US trade. So, bit of a mixed move there. We're sort of taking the view that we think many of these funds must have been short Rio in Australia and long Rio overseas as part of the plan for this acquisition they were looking at. And now they're reversing out of the US stock, and so they need to cover their shorts here. So we'll see how that one plays out. But big volume this morning.
Yeah. I think overnight in the US, the jobs report spooked the market. Bit of transition continuing out of IT. And then
Yep.
this morning, I think you're seeing Australia sort of resetting and starting to see some revaluations in some of those stocks. I think people are just starting to realise good opportunity to take a bit of profit in some and just calm the horses a bit ahead of reporting next week.
Yeah, very true. And obviously that reporting, yeah, some key companies next week. I think you mentioned CBA. I think James Hardy was another on our list, wasn't it?
Yeah, James Hardy and AGL will report amongst a whole lot of others next week as well. I mean, if the
Yeah,
US is
fantastic.
anything to go by, the average volatility or daily move on a stock reporting was over 4.5% in the US. So, I think the stocks in Australia can probably expect the same sort of volatility. If there's anything of smaller surprise in their reporting, I think you'll see some big moves in those stocks.
Yeah, very true. I think that will be the big thing, having some money on the sidelines because there will be some results that miss or just aren't quite aligned with what the market was looking at, and we could see some great opportunities to pick up key stocks at cheap levels.
Yeah, I agree. That's a few sort of stocks starting to stand out. I mean, that transition into value, they're seeing some of the stocks that have been a bit beaten up over the last little while finally get a bit of a kick along, which is those quality stocks starting to move a bit, which is great news.
Yeah, and I think if you look at long-term investing, buying quality stocks on downgrades in the market in general, it's probably been a great strategy over the years. If someone in the sector reports poorly, maybe picking up the best stock in the sector just because its peers haven't reported as well, it may give you an opportunity to get in there cheap.
Yeah, absolutely. Particularly for the patient investor that's there for the 3 or 4 year time, there'll be some real bargains come up, I think.
Yeah, fantastic, mate. Let's get into the slides.
Right, I'll just open these up here and away we go. Yeah, a
Righto, we
couple of
had
slides
what the
there. Hey,
first.
a couple of the insurers guys you want to have a quick chat about?
Yeah, look, I thought it was worth mentioning. We'd started to see QBE actually got back above $20 yesterday. It's just holding above there today with the market pullback. I think a lot of the weakness we saw in QBE and Suncorp's another one we're going to talk about as well, is has been on the back of the idea of Trump sort of saying he didn't care about devaluing the US dollar and also what that would then do to the US bond market. And obviously, insurers tend to hold a lot of their assets in the US 10-year bond because obviously it's seen as that safety sort of net position. Um, with concerns about rates, that's probably seen QBE and Suncorp to an extent sell off quite a bit. But we've definitely seen the market start to move back into both stocks. They both had pretty good days yesterday, down a little today, but look, if I give you an example, so QBE's got its target price is still 22.70, and Suncorp's got a target price of $19.85. So both of them still represent really good value, and probably ones that I think when we see their results, that may actually be a great time to look at picking up one or both of those insurance stocks.
Yeah, I mean, you can see the jump in the chart there from yesterday in QBE. Sun didn't had a jump, but not near as much as the other one, and both their price targets are well above where they are at the moment. So this is a good example of the patient investor. You might be able to pick something up here.
Yeah, definitely, and definitely feel that they're good portfolio stocks. If you can get them at the right price, I think they're worth holding. I think 12 to 18 months out, you'll do pretty well out of both of them. So, yeah, two stocks we definitely like, and maybe the chance to jump in there is emerging.
Yeah, agree. I was just going to touch on MCall. They reported this week, and they had an incredible couple of days. They're down a little bit today with the whole market, but they've jumped right up. Their report was very good. Most of it was driven by the acquisition they did last year, I think, and they starting to really see the benefits of that. Their free cash flow is pretty high. The
Yeah,
earnings per shares jumped. Their net sales were really high as well, so you can see why their share price would jump. Their price targets are still up there. They're in their 80s. It's currently trading around that 68, 69 mark, and the price target's still in the 80s. I think if you didn't own it, you could certainly think about acquiring some here, maybe averaging in. And I think if you bought it at its lows, which we were recommending it back down when it was down around that 59 mark, just before it did the stock
The
accumulation
con
at five
Yeah,
to
the
one thing.
consolidation there. Yeah,
Yeah, consolidation. I think if you bought it back there, you could start thinking about some options trades here, whether it's a repair trade or even selling some calls if you're happy to take the profit on it. But yep, certainly another stock that doesn't look out of place in a portfolio.
yeah, it's been a great run, and I think we were pretty active, obviously pre-split, trying to get in the stock around 12.50, $13 for
Yeah.
clients, and I know we've had a few pick it up there. Must be getting to a point where you could certainly look at writing calls as you've suggested, Gav. I think that would be a pretty sensible strategy to start getting some income in. Maybe a 70 or $72 strike call for a month or two out would be a good one to look at for those that did pick it up.
Yeah, I totally agree. And with the jump in volatility the last few days, the options premium certainly jumped with it. So there's a bit of premium there if you're selling, that's for sure.
Yeah, fantastic. Mate, a couple of others that we haven't got on our slides, but I thought was sort of worth discussing was Woolworths and Coles, obviously that consumer retail sector. We've got a bit of an interesting move. Woolies has had a really good run, and it's up around 31.70 at the moment. Look, I've got my target for 12 months out is $30.50. So Woolies has certainly pushed well above that target. Whereas Coles, which is up a little bit today, around 21.20. I've still got a target there of 24.67. So it'd be sort of a good idea if you do own Woolies, maybe consider lightening out of Woolies and maybe moving into Coles, because that upside target is still quite a long way away. We're almost 10% of upside in the price of Coles to that target. I think it's one definitely worth looking at. If you're long Woolies, maybe lighten out and add some Coles to your portfolio.
Yeah, a while ago I put together a chart showing how the two move around, and they do jump around and do equalize over time. And I think they've certainly, when Woolies was having its trouble in the media, they fell a long way, and it's certainly come back to where you
Yeah.
think switching out between the two. So that's a good trade to look at if you owned Woolies.
Yeah, definitely, mate. Definitely move on. Reporting season, as we've touched upon, so there will be some interesting numbers next week, and really could create some volatility for the market. It's interesting looking at the volatility in our market at the moment. It's still pretty low. We're still around about 13, which is probably high for where we've been over the last 6 or so months. But with the geopolitical risks and about to run into reporting season, I do feel we're still probably underpricing risk a little bit. So there's something to watch as results come out next week.
Yeah, I mean, US volatility spiked into the early 20s last night, so we're
Yep.
we're well behind that. And that could be a bit of the sell America, buy elsewhere. I mean, Australia is seen as a pretty safe haven for investing, so you could easily see some more dollars flow into the Australian market in the coming week as well, particularly if America starts misbehaving. So yeah, I think reporting seasons, we're going to see volatility in those individual stocks, but yeah, the market as a whole, really is that safe haven internationally. So we'll just wait and see how the next week pans out.
Yeah, definitely. Obviously, mate, big weekend in sports, Super Bowl in the US. So that's something I suppose US investors tend to get very focused on. So we'll be a big start to the trading week next week coming out of their Super Bowl, well, Monday for us, but Sunday for them.
Yeah, they might have a hangover on Monday.
Very true.
Okay, have a great weekend.
You too, mate. Thanks for that.
Bye.
All good, mate.
Yeah.